Welcome, and here we're looking at the US 30, and as you can see, things are pretty much going according to plan. We're looking for the first high above the level, that's of the 15,500, and we're looking for a little five-wave structure to the upside here. It looks a little bit squashed up here, but on the cash market it's running fine. So we're looking for a new high above here, and then an ABC correction as such from that point there. So when you're looking at on the Dow here, this is not quite right here. This should be over here. So we're basically looking for wave 1, wave 2, wave 3, wave 4, and wave 5. And as I mentioned, the cash market's clearer than the futures market, because obviously the futures market's trading in odd hours and lower volume at some time, so it takes up just time on the chart, which is just a lot of noise. The other important thing here too is that, you know, we're positive and will remain positive while the 15,500, the midpoint, is support. It's as simple as that. So continue to trade long. The S&P 500 will have trouble at the 1700 mark. Just looking at this wave structure to the upside here, we can see that the trend here is still expanding to the upside. The cash market was a little bit sluggish, but in the after hours, the US 30 has run higher. So the US 30 is trading higher than the cash market, so that's a positive. Intraday trading here now, then you would either need two things here. You would need this market to get captured into group 2 here and trade long from that point, preferably with the 15,572 as your retested support, but you can do it from the 65. Otherwise, if it sort of shapes up and moves back down through here, then realistically you need to wait for that to play out as support there, which is it would be something always nice if it goes below, but you're just looking for something, that's sort of just, I don't know, just sitting, that's tested it somehow on that number, and you can go from that point. Anyway, positive. The S&P 500, we'll have a close look at this in a moment. As you know, we've been working through group 2 here, and while the market's been above the orange line here, the 72, we've just remained positive in terms of trading the trend to the upside, because you need to manage your exposure, and of course getting to the 1700 would be a milestone, so we could just naturally expect some type of reaction from there, which would show up in the other markets as well. In showing up through there, there's not a lot that can really happen, well, we're here, just put on this here, so you can get a situation where it just goes straight up and doesn't react here, but normally the distance it goes above would be the same distance it goes below after it runs out of steam. That's one thing. The other way, it can just come up and touch on here and then have a type of, three-wave correction, and it's a three-wave once that move up here overlaps the bottom of that structure, and that leaves you with this ABC correction. Once you've got that, then you know that high is going to be taken out and you can trade long from that point. So I would expect some sort of reaction from here as such, and either total failure from here or another push to the upside. But a push to the upside here would see expect a larger correction across here, and the good thing is too, the larger the correction across this level here, the accumulation point of view of it, well then the safer the next trend. So the bigger and uglier the correction, the safer the next trend. Right, so that's pretty much all the same there. Right, so the European markets are also positive as well. The DAX, next step here, it had the top of group 183, which is the top of minor group 1, and this is the top of subgroup 1 here, and it was resistance, checking for support here. Now it's support on top of the 83.30, so it'll have a little bit of problems at the midpoint, the 50, look for support on that and further to the upside there, but it's a FTSE that I'm more interested in, and we're looking pretty much the same as the S&P 500 really. We're looking for a little five-wave structure up through here, and that would be the 1 and the 2 in here, and that would be the 3, and look for the 4 here. So we're still looking for a move above that, which you would need support on the 66.30 for that. So and this is how we've been chasing it up here during the week. We've moved our way through this ABC correction quite nicely really, I thought, in terms of monitoring there. So we're looking at the 1, the 2, the 3, the 4 and the 5 up through here. Don't expect too much of it, but expect a you know, the market to work across this midpoint here. So but anyway, a little bit further upside there, and then we may see a larger correction that could unfold back into this point here. Let's just take one step at a time, and let's just see once we do get to here how this unfolds. Now this will have some sort of relationship with you know, with the Australian market as well. So when we're looking at the Australian market here, you know, of course I can be wrong, but we've counted this leg up through here as wave 1 or the A wave, and A and a B and a C back for wave 2 or the B wave. So this would put this up here as the wave C up here, or wave 3. If it's wave 3, then we'll be looking for a 38.2 retracement level of this here. So we'd expect it to move back at some point at the 4900 there. That would be one pointing case for it, and then from that point we'd be moving up there. That's if that is a wave 3 at this point here, but at the same time it can also be a wave C as well. Sorry about making that small, just enlarge that a little bit. So that's what that's part of it, what I don't understand. But the other point too is that, you know, this is the 49.72 here, and you know, while that's support, then you know, trade to the upside. It has broken it before, but each time it's come down, it's quickly, you know, popped back up through that as well. I do have to point out that on the cash market though, on the XJO, the cash market, this move down here appears to be in 5 waves down through here. Doesn't look like it here, but on the cash market it does. So the cash market has moved back up to about this point here. So the futures is trading higher than the cash, which is the same as the Dow Jones as well. So that is a positive. And the cash closed on this price here too, the 49.72. So it's quite critical that the cash market stays above that 49.72, and if it finds it as a retested resistance, well then that's the first layer of weakness to the downside, and then that means that you need to be trading south basically, you know. But as it stands at the moment, it's still to the upside. And as I said on Thursday, I know this sort of moved down quite quickly on the Friday there, but the US markets and the European markets, because of the wave counts, we expect them to be positive on the Friday and also on the Monday as well, and that's reflecting back through here. So you know, everything's sort of on track. We just get these things that come out of left field now and again. Alrighty. The other thing too that I just wanted to point out too is the Combank, which is up at the 72 here. So you know, we could see that you can see that, you know, it moved up quite nicely, and you can see that it's really playing some sort of part here as a resistance, isn't it? So you know, if you're trading this long, well then you really need that 72 as support here. So obviously there's some, you know, some type of weakness that can creep into here now. You can see this little pattern here is the same as this little pattern here. So that little pattern dropping here can just increase in size. But while it's at this 72 here, just I don't know, it's just a point of weakness, that's all. And if it becomes support, well then we're bullish again. You know, it's you know, we'll go where the next party is, so to speak. Alrighty, commodities, let's have a look at those guys. Okay, starting with oil, and look, oil's pretty much on track. We're looking for 5 waves up off the 105 area there, and currently we're at 108, and at 108 we can expect at least 3 swings across once we got the high in place. So considering this the high here, we can consider this an A and a B and a C here. So allow 3 swings to go on before looking for support on 108. If that's the case, then we'll be looking up between 109 and 110 from that point there. And as pointed out before in the bigger picture, a breaking of the 110 creates this whole move that we're working with up through here as a very powerful third wave, and we'll be going much higher if that's the case. So but do expect a reaction at the 110 and also a larger ABC across this level here. But once we've got support on the 110, then we can look at the 120 from that point there, and that would be a very nice trade indeed. The copper market, look, in a bit of a nutshell, while it's above the 310, then it's positive. If it drops below that, then we're going to see BHP in trouble at that point. With BHP in Australia, the 34 is the Fibonacci number that would be looking at through here. So you need to kind of work out this week if it's going to find that 34 as support or resistance, and normally the way to do that is you can just sort of see on intraday level how it's sticking to it, a little bit like the XJO at the 5,000. You know, that 34 is an important geometry element, and you'd need that as support. So 13, 21, 34, 55, 89, those numbers. So right, the gold market, it does appear that it would like to go higher, but silver's not giving that away as such. Let me just find these charts. Okay, with gold here, we were looking for 5 waves up to make wave C of 4. Now, we've had that sharp move down here, which appears to be in 5 waves. So we're calling it as wave 1, and then we're looking for wave 2 to come back here. Now, look, we can allow it to retest the 1300 here, but if it moves above this one at the 13.1, I think it is, then it's it's invalidated that wave count, and we would have to look at this in a different light, where we would have to look at all of this correction here as a wave, pretty much a wave 4. So we would need to look at it like this: wave 3 to here, and a wave 4 way over to here in terms of an A wave, a B wave, and a C wave here, because it does have 5 waves in it, and then we'll be looking for one more new high through here. But it's also really important to trade with the numbers as well. So once again, because this market's been above the 272, which is stronger than the normal 72, so 772 and 272 and so forth is stronger than normal 72, well, we couldn't short. If as a betting person, I would have to be long above that particular number there, and that would also be the same for support on the 1300 there as well. So even though we've got a wave count like this, and we're looking for a short, we don't have it in terms of the trading levels. So it's nice to have the trading levels and the Elliott wave on the same, giving the same count, the same story, and it just makes life a little bit easier. So that we just need to allow this to play out. But see, when we have a look at silver, for instance, silver's its sharp drop down, it's basically been, hasn't really shown a strong impulse wave to the upside like gold has. So I'm in sort of two minds. And the other thing too is that copper, the base metals, is being supported as well. So with copper, it's going to be really interesting to see if we get support on 315, which is a midpoint as well. So yeah, we'll know shortly. So nothing sort of cooking here that much. So you have to look for other markets. Okay, with FX here and looking at the US dollar here, look, really quite simply, we can see that the 83 on this 4-hour chart here is resistance, and while that's the case, then we have to be on the bearish side of that. So we can expect lower prices to come in from this point here. If you're shorting this market, well then you would use the group 2 here. We can see that that's been retested, was support, now it is resistance, and the same happening here as well. So group 2 here, and this is a really important number. I mentioned this before, it's the 272 here, the 8272 here. So that is resistance here, would be the short trade through here as well. So look for the 8265 to be taken out, and then it's down to the midpoint from that point there. And obviously, if that's the case, then the euro would be to the upside. And with the euro here, as you know, the minor level here of 130 is a top of minor group 1, and now we're into subgroup 1, which would be 1, 2 and 3 here, and we're looking for it to fail up into this area through here while it's above the number 1 here, the 131. Then it's positive through here. So what you'd be looking for here is you'd be looking for support on 131.30, the top of group 1 again, to be long up to the 50 there. This move down through here appears to be in 3 waves, so that's why we're looking at this making new highs above here. If I got this on an intraday here, yes, not too clear, here we go. So look, this is reasonable support on top of the 31.30, but of course it's the end of the session from last week, and you need the market to open and let the volatility, the volume flow in there. But if that support stays there, then you need to be long from that point. You could probably build in on the 40 and then on the 50 to the upside there, but positive as it stands. The Australian market is a bit different. It's been on the weaker side here. We've had this from this low point here, which is significant, whichever way you look at it. And we've got this nice 5-wave structure up through here. So we should see further upside through here as well based on that. Unless, well, there's a couple of counts here, but the main thing here now is that after this 5 waves up here, we've got this move down through here. So we can expect that to pull back the 61.8%, which is from here, it's down where this little B wave here is at 91, so that would kind of be the target area for that. And because it's failed at 92 here, I was looking for a retest into 92, it's failed that and it's moved down through here. I guess this can be counted as a bit of an impulse wave up here, but not very well, because it's just I don't know, it just doesn't sit that well with me. But the trading strategy here would be, look, if the 92 finds support, you know, nice tested support, so have to trade, you know, up into this area here and come back and test it and, you know, develop it, and then you can trade long, build a long trading through here. But if that's not the case, then as it stands at the moment, this is negative. And if this 91.72 or this group 2 here finds resistance, then expect these lows to be taken out through here. And that's, you know, it's probably the case because we've got a nice resistance coming in at this point here. But once again, it's the end of the week, people are closing shops, so allow the market to open. But our main aim was looking for a retest into 92 and failing from that point and continuing to the downside through there. So look, it all just boils back to that that 91.72 there as the retested resistance from there, with the stop above here. But once again, allowing that market to open up there. Okay, so look, it's for the robo trading, it's a little bit sort of tricky, because I can see that, you know, the metals haven't pushed up, the base metals haven't been pushed up too much, the oil's up, so that's going to help the material sector somewhat. Gold's up a little bit, but that's in its sort of own shop there. But we're not really seeing copper push up. We know it has got support, but we just need to see if it fails at 315 or finds support on 315, and that will give us a bit of a guiding light for the material sector to be long or short in that. But we also need the finance sector to come into play as well. So when we look at the finance sector, that's just the material sector. Well, we're here, XXJ for the banking sector, daily chart here. So this is it here. So we've seen this sort of, well, it could be classed as an impulse wave to the downside, and then we'd be looking for a 61.8 retracement level here for the banks, and that would bring it up to the 65, which is the medium level here. So I suppose it can push up a little bit higher, but you know, as looking for that that 72 on CBA as well. But you know, when you put that in here, then you've got yourself a nice little head and shoulders here. We can see that it's getting soft here as such, you know, so even if it does push up here, it's still going to be soft. It's not going anywhere you know, in this position here for a while. So you know, it's going to really keep that that ASX 200 at the 5,000, or it's going to drop from here. So we just need to be a little bit sort of a bit careful. We know that the US can push up a little bit further, but this has got a bit of bearishness coming into it now. So we've got to really look at the material sector and the copper and the nickel and so forth to see what's, what strength is coming in from that section. Because the other point too is we're not really getting much from China as well. So when we have a look at China, just bear with me a little bit here. Shanghai here. The thing with the Shanghai is that obviously this looks like a nice strong third wave coming down through here, doesn't it? Taking out these lows here and getting a bounce off here at the 2000 level through here. But the thing here is that move up there is in like 3 waves now, isn't it? Because this move down here has overlapped the top of that one there. So it does make this corrective, and if that's corrective, yes, it can, it can muck around here for a while, as such, do a few swings and things, but it really puts the bias to the downside here, and this is a 4th wave here, pulling back to the 38.2% of this move down through here as such. So, it does come in reasonably well for what it is. So we just need to be a bit mindful of that. There's no instant strength coming from the Chinese market there as such. So, yeah, just got to be mindful of that. So a bit of a bear in the air, so to speak. Alrighty, well, good morning, good luck, and enjoy the day ahead.